Hi there, good morning, and thanks so much for tuning in the trade setup today. Apologies for yesterday, we couldn't bring it to you, but we are back, of course, as usual. Now, just at the start of the trading day, our prayers, along with going out to all the people who are fighting COVID for today, are also going out to all our sisters and brothers who might be caught in the fury of the eye of the storm, which is now moved on to Gujarat. This is the pictorial map on the Bloomberg terminal. And as you can see, after circulating in and around the west coast of Maharashtra, the Konkan regions, Sindhudurg, Ratnagiri, and to an extent Mumbai as well, we had fairly high winds and rains. I think the epicenter has moved northwards to Gujarat, and as I said, prayers for all people out there who might be caught in the eye of the storm. It won't be a pleasant sight. I can tell you, we were in well-built concrete homes in Mumbai, and yet we felt the fury to an extent. Just hope that the situation is not too bad out there in Gujarat today. Cross fingers for that. Okay, let's get back to markets. Remember, today is an important day. First, let's get the US markets. I mean, did it okay? They didn't crack too much. There was a belief that, or there was a fear that, and as you can see in this chart as well, right, that they were all trending lower, had come off to about 0.5% to 0.75% on the Nasdaq in particular. I think it ended flattish, and the futures currently are flat. Remember, it's an important next 2 days because the minutes of the Federal Reserve policy will be out on Wednesday. Now, almost everybody believes that the Fed will ignore the higher inflation. The point is, will the dollar ignore that? And I think that might have a few repercussions because that will show the mind of the market, right? Maybe the market believes that the Fed is slightly behind, etc. But I think, to be fair, for tomorrow at least, while the minutes come out, I think they'll downplay the threat of inflation, which is actually good for the equity markets. On the back of what US markets have done, Asia today is chop and change, so to say. Some markets are doing really well. Very few, if any, are marginally off in trade. So it's not a bad start that we have at our hands today. And let's get the SGX Nifty up. I haven't even seen the SGX Nifty this morning because I thought it would be a very placid morning. Let's just get the SGX Nifty, and both you and I can see what it is slated to do. Well, let's see if there is a pickup there for the Nifty in the session today. Frankly, if this has to happen, you know that banks will do it. Actually, let's first get the trade set up, then we'll get the MOV function. So frankly, banks have shown strength. For the last 5 days, I've been arguing that banks could well likely defend 32,000, and boy, they defended 32,000 with gusto. We were about 400, 500 points away from that. But still, we didn't even dip to the support level of 32,300, let alone the critical level of 32,000. Bounced back very, very strongly from there. And much to everybody's surprise, I don't think too many people were in that camp which were believing that banks will do well, right? The usual suspects, metals have come off, they will come back. Some of the other spaces, banks were almost a nobody, and banks did really well, particularly SBI, and a big day the next few for rate sensitives. But yeah, banks did really well, and that's the key talking point. I still think, despite the up move yesterday, that the risk reward is not very unfavorable right now, but it might be better to be stock specific. However, here's the statement. I mean, at least as per my understanding and conversations that I have with dealers, with smart men, the risk reward is not unfavorable. Now, after we start off 1%, 1.5% up today, it will depend on how the day progresses as to whether the risk reward turns slightly unfavorable for now. But I think for now, it does seem, looking at certain quant indicators, the risk reward is still favorable if you want to take long positions. So that's the key thing. And just very quickly, let's just get that this terminal function. Look at the market breadth in trade yesterday. 355 stocks advancing to about 143 declining, and a bunch of stocks did really well, right? I mean, forget HFCL, Shilpa Medicare on the tie-up with Reddy's for producing Sputnik, ending up about 12%. Balkrishna Industries, strong 10% up move yesterday on very high volumes as well. After the numbers and the commentary, Venky's continues to rise and shine. Some people tell me technically it's placed very well. The Adani Group stocks came back with a bang, so really strong show. KPIT Tech, you heard the management on BloombergQuint a few days back, that did very well. And on the flip side, there were a few losers. Just Style cracking 6% post numbers. I think that brokerage commentary today has been half decent, so to say. And there were a few other IT names which came off a little bit, but very few. I mean, not too much really. I think the bend of the market was towards the gainers, and that was a good sign. Now, what about stocks that will likely react today post numbers? Post at 9:15 a.m. I'm bringing you 4 or 5 names that I think are pertinent to keep an eye out for. Yeah. So obviously Airtel comes up. Now, here's what Airtel did, right? Revenues were at 25747. The estimates were about 26165. So marginally below estimates on the revenue front, marginally below estimates on the EBITDA margin front, below estimates on the net profit front. So optically, quarter on quarter, forget consolidated. Yeah, I mean, yes, I'm giving you the consolidated numbers, but this is all versus estimates. So my error there. I mean, this doesn't matter if it's quarter on quarter, year on year. We are comparing it to the estimates. But let's figure out what the brokerages are saying, right? Because that's the key thing. I mean, what has the smart analysts thought of Airtel's numbers? So I've got you 2 notes today. UBS, for example, says it's a healthy set of numbers because aside of the reported numbers, Bharti is outperforming Jio on most metrics. The impact of the second wave on COVID-19 subscriber additions and ARPUs will be a key monitorable, but they believe that Bharti is well placed in the sector and they maintain a buy with the target price of 665. Goldman came out with a note. They have marginally lowered their FY 22 to 24 EBITDA estimates for Bharti, presumably because of COVID-related subscriber addition issues. They reiterate the buy rating on the stock with a revised 12-month target price of 665. It was 670, so hardly any change there, but it implies a 21% upside from the current levels. The key is, viewers, Bharti typically moves anti-consensus. At 610, I remember, every analyst on the street said, it's all great guns we want to buy, and the stock just corrected. Currently, I think the street is a bit skeptical. Can it do well? Maybe it could. The operational metrics compared to Jio are not looking bad. It's a tough stock to trade, so be mindful. Yesterday, there was some short build-up on the company, on the counter as well. So just be careful if you're trading Bharti Airtel in the session today. The numbers optically look bad, but the internals compared to Jio looked okay. Which way the market will read it, time will tell. The market is on a good trend, so you've got to keep that in mind. And Gland Pharma, I don't track this company very closely, really, but I just thought it was important to highlight the fact that their EBITDA margin performance was very, very strong. Gland Pharma, 27%. Console numbers. Revenues were up marginally, 887, and the net profit was up about 28% at 260 crores versus 204 crores. So they did very well on that front. So do watch out for Gland Pharma in the session today. GNFC, decent numbers, revenues up 15%, net profit up 29%, margins at 27 versus 24%. Actually, in Gland Pharma's numbers, the margins were at 37 versus 30%. So it's a small mistake from our end. But anyways, the margin performance is strong. In Gujarat Namara Valley Fertilizers and Chemicals, look at their EBITDA margin performance yet again. They've had some fairly decent traction in the last few weeks on some key developments within the company on prices, etc. as well. So could be very, very interesting. Fertilizers is not looking like a bad pocket. Do watch out for GNFC. Could be an interesting name. Orient Cement, and cement is looking very strong. You know, viewers, keep in mind, Dalmia Bharat was the least preferred name, and that was trading at record highs yesterday. Look at the numbers from Orient Cement on a quarter-on-quarter basis. And again, a lot of you will say, why is it when we are comparing cement on a quarter-on-quarter? Because last quarter, March, we had 15 down days. Therefore, it's just wrong to compare on a YY, because YY, it will look good. But this one has done well QOQ too. Revenues up 38% at 831 versus 604. EBITDA margins at 24 versus 22%. Net profit up 85%. 99 crores versus 53 crores. So not a bad set of numbers. Now remember, viewers, all cement companies are chalk and cheese, right? And no two companies are similar. But you have to take cognizance of the fact that when a company is delivering good numbers, the market is rewarding it. Birla Corp is a case in point. I think Orient Cement's numbers are very strong. It will be interesting to see how the stock does today. I would urge, unfortunately, I haven't gotten you the brokerage reactions. Maybe I should have, but maybe the BloombergQuint Twitter handle will give you, or other media sources will give you. But try and figure out what the brokerages are saying about Orient Cement as well. My guess is that it should be positive. So do watch out for Orient Cement today. If it reacts positively, you know why this is happening. And I think brokerage notes came out on 2 stocks. One was Colgate, wherein most people have said positive things, and one is Federal Bank. But then I'm bringing you Citi stake. They're saying that the quarter was ho-hum, but they're maintaining the buy with the target price of 100 rupees per share. They do warn that the extent of the second COVID wave could lead to some uncertainties in the near term for federal banks. So do watch out for that as well. So net viewers, watch out for banks because price is in their favor. At HDFC Bank at 13.95 was trading sub 3 times book. It's not done that for too long, and it's a strong bank. Once the RBI clearance for its credit card business comes, you will not get a chance to buy the stock, which will open gap up. So banks are doing really well. So do watch out for those. Do watch out for cement and Orient Cement in particular. I don't quite know what Bharti Airtel could do. It's a bit of a tough call really on that one, but let's wait and watch. And watch out for Just Dial, by the way. Sorry, I didn't bring that up, but Just Dial, while the results are bad and the stock is corrected, I think the con call reveals that they have made two very interesting hires. They've hired the national sales head of India Mart for the B2B business, JD Mart, and they've also hired somebody for marketing from O&M, if I'm not wrong. So it's very interesting what Just Dial is doing. They're putting the building blocks in place. Now, if the economy revives well, you never know. But keep in mind, Just Dial will have a big write down because of IPL expenses in Q1. And therefore, after this fall today, is there merit in trying to look at the valuation? There sure is. But just be careful because of the Q1 related weaknesses. That's it from our end. Thanks so much for tuning into the trade setup. Have a profitable day ahead. We're going to be talking to Cipla at 9:30 a.m. So you may want to log in for that. That promises to be an interesting conversation.